What's going on, guys? Peter Zhang coming at you via Marketfly and Benzinga. Wanted to give you your market outlook. There's a cat right there, and just one thing to lay out. Market structure is all kind of messed up. Nasdaq got in some weird issues last week in the options. Goldman Sachs even had an issue a couple weeks before that, where all the options went to one. And a lot of these things are major issues in the markets. And hopefully you guys also saw that there are rumors of these market makers coming together actually and combining forces. What's really funny is that all the big major banks are actually the owners of these market making firms. So again, educate yourself on market structure, understand what's going on, look to more issues in the routing arena, and freezes in the markets, okay, because all this is really bad news. But anyhow, we'll get back to the market outlook here. SPY overall is relatively bullish. The day of the actual Nasdaq breakdown actually showed their hands a little bit. The fact that the markets did not peel back at all and actually ended up higher, it's pretty much showing that if that breakdown did not happen in the Nasdaq market maker unit, that we probably would have gone through 166 without an issue. One thing that you want to make sure that you see is that right now we're still in relative consolidation, even though we're bullish the next maybe week or two. The longs are not going to be easy to get. The shorts are not going to be easy to get. Volumes at all-time lows still. Everybody is still out to lunch. They're out on vacation. So again, guys, personally, I'd recommend sitting on your hands. But if you want to play anything long, some recommendations. Again, you guys make your own decisions here. But what you need to do, again, is go back and forth between the financials and in the techs. Okay, you need to find your support levels. Really good players these days for a dip buy in the financials are Goldman Sachs and JP Morgan. They've been moving a lot easier. Things you want to stay away from are Citigroup and Bank of America. They've been showing more choppy behavior. If you guys see that they're doing a little bit better, find a dip, play some two strikes out of the money options, swing it for 2 to 3 days. If you are playing any of the techs, you have to be careful. Okay, right now. Social media is kind of hot. Tesla's kind of hot. All these names are really moving, but it's not really a great time to buy. You have to wait for your dips. You have to obey this, okay? Anybody who's buying breakouts these days are really getting smoked out there, and you don't want to be part of that. All right, this is not a breakout traders arena. Okay, this is a stock pickers arena. You got to find the horse that's moving. If not, you got to be a dip buyer. What are you going to dip buy? You got to buy the thing that's lagging the most. Okay. Names that have been really nice for laggards are Google and Priceline. Things that have been just moving by themselves, Amazon and all those things, kind of tougher to play because they're gonna try to bring you in and try to lure you in to buy the breakout when they're not actually gonna work. Look at Apple, for example, complete failure. So again, guys, dip buy, dip buy, dip buy, or sit out. Switch back and forth between sectors. This is times for professionals to come out and play if they even want to play. Retail money usually gets smoked in these environments. All right. Overall, SPY is bullish, but I would not expect any peak over 170 unless there's some catalyst coming along with it. Okay. So again, guys, it's a stock pickers kind of plays. You got to pick the things that are moving without the markets. And if you are playing something with the markets, pick something that's a dip buy, relatively cheap, low volatility, snag options that are 1 to 2 weeks out. Be sure to average in 1 to 4 times, and take your time with it. Okay. Again, personal recommendation: go out and have some fun. But if you want to play, play with caution.